Now, the question is, how much over 30 years is that 1.25% fee going to cost you? Now, we know fees add up. We know they reduce the amount of wealth that you have. But has anyone ever told you cumulatively, if you have a 500K account invested in the market over 30 years, how much that 1.25% is going to cost? My guess is they haven't, because when we went out to kind of do this and look for this information as fiduciaries and trying to figure out what's the best for clients, there wasn't actually software that just would show you how much the client paid over 30 years. We had to actually create that and add it up. So here's the number. Hold on your chair. Your traditional investment account is going to cost you $364,000. Okay, that's what a $500,000 invested account, you're investing over 30 years, that's what that fee adds up to. So it's a pretty big number. Now, first, that surprises a lot of people because it's a big number. So now let's look at the alternative. Let's say I take the same 500K and we're going to use the index life policy, the IUL, over that same time frame. Now, the nice thing about insurance companies and products is they give us a cost ledger that shows us exactly what the fees are projected out all the way to age 120. So we're going to add up all the fees and costs that come in their report. That makes it really easy to see. And what if I told you that that cost over 30 years was $160K? Okay, significantly less, a couple $100,000 less than this management-based fee up here. Okay, so now the first thing, I know both of those fee numbers are like, wow, I'm paying a lot of money in fees. So we have to put this in context, because fees are all right as long as you're getting the value out of those. So what if I can't, because if you don't know the context and what you're getting, you might say, hey, those are both expensive. If I came in and said, hey, you should put 500K in this IUL and you get 160K out, it's going to cost you 160K, you're like, yeah, that's expensive, I don't want to do that. But if at the same time I gave you the context and said, hey, well, you're also going to get 2.4 million in tax-free income out of that. Okay, that's a little better. And you still have a death benefit because it's life insurance, so another 600K in death benefit. So really, you're going to get about a $3 million, payout for that. You're like, okay, that's a little bit better. And then if I told you on the asset side, this is going to be, roughly about a $1.6 million payout. If we project the market, and it's going to be taxable, right? You still have to include taxes out of that. So first thing we got to do is put everything in context, and the second thing, costs add up, but when you do it right, you can still end up where you need to be. So I think it might be helpful now to take a break from this board. We'll go over to my screen, and I'll show you some examples of the charts on how you structure the IUL in the right way, because it can be good or bad. IULs can be structured wrong. It can be the most expensive thing you buy, and it sucks and never makes money, or you do it right, and it can perform and outperform most other assets. So let's go over my screen, then we'll come back and do a quick summary. Thanks for watching. Make sure you go to wealthforlife.net and get the entire free video series that will go through all the different elements of this strategy, plus give you the interactive downloads and worksheets. You can access all that for free at wealthforlife.net, or just click the link below in the description.